to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance and the stocks. We'll touch on that as well in the semi space. Nasdaq Volatility Index, or what we call VolQ. We'll also take a look what's happening in the 10-year as well as preview some earnings. Shawn, we've got a lot to get through today, but let's stick with the Nasdaq-100 technology volatility. Stick with those charts.
Yeah, so right now, a little bit of a pullback here. We're seeing that across a lot of the major indices, and they've had a pretty solid run. So now it's just really looking at areas we can keep an eye on as maybe initial levels of support. And the one that's jumping out to me for the Nasdaq-100 is right there around that 20-day moving average, right around 16,172 or so. That's where I'm looking to see if we can get that to hold. If so, then you may see some buyers come back in and use this pullback in some of these big tech names as an opportunity to go out there and maybe get some of those shares at a lower price. Looking at the RSI, it's pulled back. It was just in overbought territory before we started this pullback. And right now it's sort of right there in the middle at 56. So it will be interesting to see if maybe that is also something that can be a stabilizing factor where you're not necessarily very far into overbought territory according to the RSI. Maybe that will prevent more sellers from coming in here. But looking at some of the other areas that I think I've found interesting is one of the semiconductors that had an incredible run, really been some strong performance. Those are pulling back, but still well above their 20-day moving average. That would be right around 3,710 as an area to keep an eye on to see if maybe we get some support if we do continue selling off in there. But they're also at a pretty interesting level right here, just below 3,800, where you could maybe see some more buyers coming in and using this as an opportunity to get some of those big high-flying semiconductor names. But looking across the market as a whole, you don't really get the sense that there's going to be a strong acceleration to selling. It is telling you to maybe expect a little bit of a wider range for these indices to be trading in, which makes sense because we're coming up on that holiday period where maybe you get a little bit less volume and maybe some unusual moves and some unusual positioning as we go into the end of the month. But I do think right now there's this sense that there's a little bit of some profit taking here, maybe some selling, but it doesn't appear right now, just looking at VolQ, to be indicating that there is a strong sell-off anywhere in the offing.
Right. And then, Shawn, and part of that could be also that what we're seeing happening in the 10-year as well, knowing just the sensitivities that some of these stocks as indexes have to it.
Yeah, and one thing is not always just the level, but it's a matter of how fast we get there. We've seen a pretty decent backup here in the 10-year yield, but I still think 1.7 is that threshold where if we don't break above that and go flying through 1.7% on the 10-year, I don't think the interest rate story is going to be what really knocks these stocks lower. I think watching that, though, and making sure that we sort of keep that as a resistance level on the upside is something to bear in mind, because I do think the yield story, and if we get a strong acceleration higher here, that could be one thing that could cause a little bit more volatility to come in to some of these high growth tech type names.
Right. And then we also have some earnings to look at even as we go into the holiday seasons, Autodesk being one of them.
Yeah, Autodesk is really in an interesting area of the software market. They're really more focused in sort of architectural, construction, engineering type projects. It's a leader out there in the space, but they've got some pretty lofty targets out there just in terms of profitability. If you think about it, they're looking for profitability that's well ahead of a lot of the other industry, or a lot of the other members of this industry out there. And whenever you do have that sort of premium in terms of your gross margin percentages, that's something where you really need to make sure you can deliver on, because the market starts to feel like maybe there is going to be a little bit of compression there in that profitability. It can drive a lot of volatility out of the name. But right now, this 300 level looks like an interesting support level. The options market's expecting about a $15 move in either direction post earnings. So I think that would also be interesting on the downside, because that would put you right around 285. And that was another area of interest, I think, just from a volume and a price level that we had seen previously. So seeing if 300 holds, and if it doesn't, seeing if that 285 becomes a next level support. If there is any sell-off, I think it's going to be interesting to see. But another company, when you think about everything that's going on with the construction, be it in the commercial or residential space, this is a big player there. So this could be another way to get a good read through on the construction market as a whole, whatever we hear out of their earnings.
All right, Shawn, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.